We are 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, the AI race. Meta assembles a superintelligence team while Apple expands its deal with ChatGPT. U.S.-China trade talks continue in London for a second day as the two sides look to ease tensions over key tech and industrial goods and a bargaining chip. We'll explore how Boeing has emerged as President Trump's preferred trade tool to gain leverage in negotiations. What are the stocks that we're watching right now?
Let's go back to Meta because this is an interesting one. Meta recruiting dozens of experts to achieve artificial general intelligence, which can theoretically perform tasks as well as humans. This is a clear priority for Mark Zukerberg, who is personally hiring the team and also arranging the desks to sit near him. Perhaps that's why you've Meta shares higher by about 1.2% right now.
Yeah, in terms of Apple, at the Worldwide Developers Conference, it's super boring, not impressing analysts on the street despite an advanced partnership with OpenAI, a refresh of their operating system. Can't they do better than that right now? Investors don't think so, and the shares are unchanged, Katie.
Well, keeping the conversation going on AI, ARK Capital's Cathie Wood spoke with Bloomberg about the promise of AI at the Greenwich Economic Forum last night.
Generally, we think the cost of innovation is collapsing here. AI training costs are dropping 75% per year. AI inference costs are dropping 85 to 95% per year. And generally, AI is, we think, going to level the playing field.
For more on all things AI and tech, we're joined by Bloomberg Tech co-host Caroline Hyde and Mandeep Singh, global head of tech research for Bloomberg Intelligence. Caroline, let me start with you and just ask you why Apple can't do better. I mean, they've come up with very little, and investors really aren't impressed.
Yeah, I mean, some analysts going as far to saying it was a dud. There seems to be a much calmer, more soothing way of delivering us updates, but none of the flashbang wallop that we're used to. And this is indeed trying to make iterations, trying to say, look, all your products are going to work better together. It's going to have a new look, a new feel. Liquid glass is going to be more beautiful aesthetically. And indeed, you do get more fun. I don't know about you, I'm vaguely interested in my emojis becoming, two emojis becoming one and a Genmoji experience, but that is not the AI that we want. Yes, translation is going to be super useful. Yes, we're going to be able to perhaps have more an adept experience, but where is the Siri upgrade? That is what seems to be being delayed. We got hints that, look, it's not going to be until at least next year. And meanwhile, others are leading the pack when it comes to Alphabet, what they've integrated into their Android more broadly. So I think that there are, around the edges, some sophisticated changes. Yes, you've got the gaming platform coming into being as well, but this wasn't enough to drive any sort of stock reaction, and a lot of analysts are disappointed.
Right, you look at Apple shares yesterday, they actually fell by 1.2%. So investors clearly not excited about these non-AI upgrades, Mandeep. As an analyst, was there anything that caught your eye, or is it really about what they didn't say?
Yeah, I mean, from my perspective, Apple is positioning themselves slightly differently than Google or Microsoft because their big bet is on on-device AI. Now, I agree with Caroline, you know, there wasn't anything about Siri. So if you're talking on-device AI, that's a #1 surface area where they should be showing, you know, a lot of use cases. But that being said, they launched this foundational model framework, which is essentially saying anybody who has a large language model can work at the operating system level. Obviously, Apple will oversee the deployment of that LLM. And these models on device will be a lot smaller than your large language models that are working on the cloud. So look at it this way. Apple already has all the apps that give you AI functionality through their App Store. They're trying to position themselves on the on-device side because no one else has a surface area when it comes to on-device AI. Apple still controls all the devices in their ecosystem, and they want to play it at that foundational layer, which is what they are focusing on.
Look, it's becoming technology is becoming such that I go to ChatGPT for pretty much everything. And in order to do that with Apple, especially if I'm driving, I have to figure out a way to open up the phone, get into ChatGPT, switch it into voice mode. I mean, couldn't they have done that? Can't they just hire the 50 smartest people in the world and then make it happen instantaneously?
Well, so that's where the size of the model does make a difference. You're absolutely right. You know, they can hire the engineers, but the way these models are evolving, they're pretty big in terms of, you know, the size of the model, the number of parameters. So you really have to solve for not only the large language model, but you also have to distill it down to the level where it can run on device, because they're using it on your sensitive private data. They don't want it to be mixed with all the other data that's sitting inside a large language model. So that's where the sensitivity for a user data running on device, it's a lot higher than an LLM answering, you know, general search queries, which is what ChatGPT is doing right now.
Right. Well, they can't hire the 50 smartest people because that's what Meta is doing when it comes to super intelligence, this ambitious team that it seems like Mark Zuckerberg has a real personal hand on.
Where's Tim Cook's invites to these various array of AI innovators to Lake Tahoe, to Palo Alto, to go and dine with him, because that is what Mark Zuckerberg is doing. He has gone founder mode, as we know. This is all about really getting to grips. He's stripping back delegation. He wants to be hands-on when it comes to generative AI because he's been disappointed. Look, Llama 4 didn't live up to the expectations of just how sophisticated the new integration of generative AI was, and indeed how much better it performed compared to the previous open source models, technically open source, some would say, perhaps not, that they've been developing. So he wants to get Behemoth out there. To do that, he gets the 50 smartest people, whether you're an AI research head that he needs to hire. What's so interesting, and I'm sure Mandeep's got plenty of opinions, on the Scale AI news coming out just recently, the $10 billion investment they're going to make in that company, the fact that Alexander Wang is going to be becoming part of that team that you said, Katie, is going to be sat really close to Mark Zuckerberg in the Menlo Park office.
I mean, assuming they come to the office every day, which if they're the 50 smartest people in the world getting paid so much they can't believe it, I don't believe they're going to all show up to work every day from 9 to 5.
But they get the chance to sit next to Mark Zuckerberg.
Yeah, but look, having 50 cooks in the kitchen, is that really going to help, Mandeep? Is that the way to solve this problem?
I think in this case, you need, you know, smartest brains. Not one person can figure out everything related to AI.
Will they all work together seamlessly? I mean...
Well, Mark Zuckerberg has a playbook. Remember when TikTok really took off? That's what he did. He assembled a team that really created the Reels product and made sure that it caught up with TikTok. So I'm not surprised he's going back to that familiar playbook where he's personally involved in everything that's going on at the product level.
Is Reels as good as TikTok?
No, no. I have to say the content on TikTok, you'll see it on Reels 2 weeks later, to be a bit brutal there. But I mean, you know, it's catching up, and a lot of people, sort of the old people, use Reels.
So that's the way Mark Zuckerberg can become second best, is what you're saying.
Maybe have a WhatsApp party. What's it called? A recruiting party. Formed this whole WhatsApp group among all of his key leadership that he wanted involved. They're getting messages on this noon, day, and night.
I'm sure they are. I want to go back to what you were saying about Scale AI, though. When you wrap together this news about the Superintelligence group, it seems like that's related to perhaps the Scale AI investment. And then you think about what we were talking about last week, that Constellation, that investment that they're doing in Constellation as well. It seems like Meta just is moving super aggressively here, and it's interesting to contrast that with what we're getting from Apple this week.
And also the fact that they're going into usually areas that they'd stuck away from. Remember, they've got to deal with Anduril. They're going to be offering their technology for defense as well. Alexander Wang's already been helping advise the government. There's a more federal integration here that, of course, we know Mark Zuckerberg is making moves on in his relationship with overall the administration. So I think that we are seeing all in on all things generative AI from Meta, and indeed becoming almost a data center owner. I mean, they become a technical hyperscaler. Yeah, they're not going to be offering you cloud, and that's what's interesting with Scale AI investment. Is this just going to be $10 billion in money, in investment, or is there any offering of data GPUs? Because that's certainly what we saw a bit more with the Amazon and Alphabet tie-ups with Anthropic that we've seen. And of course, Microsoft has led the way with its integration with OpenAI and its relationship. This is Meta getting in on that act and wanting the data superiority that we get with Alexander Wang's Scale AI, and more broadly, how they're thinking about using and building models for that company too.
Yeah, it's certainly a statement of intent by Meta. It's going to be fascinating to see how that plays out. Great roundtable, you guys. That is Caroline Hyde of Bloomberg Tech. You can catch her at 11 a.m. and Mandeep Singh of Bloomberg Intelligence.
We should point out that Meta is crushing it year to date. I've just put them up on a screen against Apple, Microsoft, Amazon, Google, and Meta is doing the best of the group. So you can see the gain. The year to date is only 19%, I guess. But
only
of course,
19%?
Well, they've come back so much from the lows that we saw in the middle of April.
Yeah, and you consider that in a relatively flat market, 19%. A lot of companies would certainly take that. Let's take a look under the hood, though. We do have some movers on our radar. Novo Nordisk, for example, jumping after a report that activist hedge fund Parvus Asset Management has built a stake. This is really interesting because, remember, Novo replaced their CEO just in the last couple weeks. That was certainly a surprise move. And
Don't
now
miss a chance to say his name.
Lars Frogard Jorgensen.
Love it.
Yeah, there we go. Now we have news of an activist in that company. We'll continue to follow that. But JM Smuckers.
These are your people.
These are my people. These are all the stocks I'm interested in. Smuckers profit going to take a hit as sales are weighed down from its Hostess brands. People are buying fewer Twinkies. They are still seeing growth, though, in Uncrustables, Matt. I'm sure you're familiar with that product.
I actually bought a box of Uncrustables to find out what all the hype was about, and I haven't found a time to eat them yet.
Anytime.
It just seems incredibly unhealthy.
No,
to pull out pre-made peanut butter and jelly sandwiches from the freezer and then munch them down.
It's super efficient. You just take them out. You have to let them defrost first. Don't eat them before they defrost.
McDonald's downgraded by Redburn. It says weight loss drugs are an underappreciated long-term threat, which is like, who was underappreciating that? We've been talking about it for like 2 years.
I was thinking this is very much a sell-side call from 2023 or something like that. But McDonald's shares down about 1.5%. You know what else is happening today?
Yes, I do.
It's day 2 of trade negotiations in London. We're live from the Lancaster House next. This is Open Interest.
Let's get now to high interest. Look at what's making headlines around the world. The U.S. is no longer wholeheartedly endorsing an independent Palestinian state, according to U.S. Ambassador to Israel, Mike Huckabee. He said a years-long societal shift is needed before the option of a Palestinian state is realistic. He spoke with Bloomberg in an exclusive interview from Jerusalem.
Someone wants to declare that this is the exact strip of geography that is going to be the future Palestinian state. That's where the complication comes from.
Well, maybe the word is exact. That's the problem. Are you suggesting that somewhere other than mandatory Palestine area, that it could be in Saudi Arabia or something? Or are you suggesting?
I'm just saying that I think every option should be and could be on the table.
Huckabee, of course, a former governor of Arkansas who's previously been an advocate of Jewish settlements in the West Bank, which are, as we know, considered illegal by many states and international agencies. President Trump ordered the mobilization of 700 Marines to Los Angeles to break up demonstrations against his immigration crackdown. The turmoil comes as LA saw a 4th night of clashes between police and demonstrators rallying against a rising number of raids by immigration and customs enforcement agents. California's Governor Gavin Newsom called sending in the Marines, quote, a blatant abuse of power. The protests are spreading beyond California with rallies in San Francisco, Chicago, Washington, and other major American cities. The White House said it will not tolerate an insurrection that puts law enforcement's lives in danger. Meanwhile, Defense Secretary Pete Hegseth will testify before a House panel today. It's his first time on Capitol Hill since being sworn in 5 months ago. He's expected to face tough questions on defense spending and signal chat leaks, but overshadowing much of that testimony will be the Pentagon's decision to send active duty troops to Los Angeles to quell recent protests, something that is normally considered illegal. And it's the second day of trade talks between the U.S. and China underway in London. Upon arrival, the Commerce Secretary Howard Lutnick gave us his gauge on the negotiations ahead.
It's been all day yesterday, and I expect to do all day today. So they're going well, and we spend lots of time together.
And that was Commerce Secretary Howard Lutnick speaking to our chief political correspondent, Anne-Marie Hordern. Anne-Marie joins us now live from Lancaster House. And Anne-Marie, my understanding is they went until about 8 p.m. London time last night. Start around 10 a.m. London time today is what was reported as well. So are we expecting any material breakthroughs, or is this really just going back in time to the agreement reached in Geneva last month?
Well, this is all about making sure they can go back to that agreement reached in Geneva. Remember, following the Geneva talks, we did see a bit of escalation on both sides accusing the other of reneging on what they agreed upon in Switzerland. About 10 days ago, the Treasury Secretary that said negotiations had stalled with China. And then we had that phone call between President Trump and President Xi Jinping of China. And that really marked the pathway to get to the talks today. Now, they went for more than 6 hours yesterday talking. They had about 2 hours of talks this morning. There was a break. And then just at the top of the hour, He Feng, the vice premier who's leading the Chinese delegation, came back into Lancaster House. So the talks continue now, but they bleed into the second day. And it is crunch time, at least for the Treasury Secretary, Scott Bessent, because he is testifying tomorrow on Capitol Hill in front of the House Ways and Means Committee. So he has to leave London within the next few hours to make sure he's back in Washington, D.C. So far, we haven't heard any breakthrough so far, just that talks are ongoing. But if they do get to something concrete, it'll likely look very similar to what they agreed upon in Geneva, which potentially is going to be the United States lifting some export controls that came on after Geneva, things like jet plane engine parts, some chemicals and nuclear materials. And also the United States wants to see an accelerated pace of licensing of rare earths and magnets, which China has 70% of the market. And that's critical for U.S. defense and high-tech industries.
So what do we know, Anne-Marie, about the willingness of the Trump administration to give China, high-tech, AI-capable microchips in exchange for critical rare earth materials that are needed for automotive production? Like, are we willing to trade a little bit of national security for some commercial success here?
Well, that's a great question. I think we're trying to figure out what the U.S. red line is when it comes to national security and it comes to export controls in the semiconductor industry. Kevin Hassett, the National Economic Council director, had said there will be an easing of export controls, but not high-tech advanced semiconductors like the H20 NVIDIA chip, which, by the way, was produced to be China compliant of export controls under the Biden administration. At the same time, the president said yesterday, basically leaving it open-ended, saying we'll see. So when they come out from these negotiations, and if we get something a little bit more concrete, we will actually understand where the U.S. red line is, and that is going to tell us how far they are willing to go in the future. Because let's not forget, this is the first inning of Trump 2.0 trade war with China. During Trump's first administration, when we had the Phase 1 purchasing agreement, the trade war started in 2018, and it didn't end, Matt, until 2020.
All right, Anne-Marie, thanks very much. Anne-Marie Hordern there, Bloomberg's chief political correspondent, of course, also co-host of Surveillance, flying around the world following these trade discussions for us. Coming up, Cole Smead of Smead Capital tells us whether U.S. stocks are a bargain right now as investors anticipate strong earnings growth in at least some of these stocks through the year. It's not clear to me, exactly where we're looking for strong earnings growth. Is just tech stocks?
I have an idea. Yeah,
stocks?
it's tech. Yeah. Tech. Double-digit growth expected there. Not so much in some of the stuff that Cole likes.
Not in the oil patch, right?
No, not necessarily. So
even
we're going
financials don't really look.
No, really tepid pace of growth expected there. We're going to get into it next, though, with Cole.
Yes, this is Open Interest.
The U.S. earnings growth is there. We're seeing about 13, 14% earnings growth, but no one cares. Actually, U.S. quality stocks are the worst performers within the U.S. equity market and for the global market. quality is on sale. The U.S. is on sale. The Sell America trade that we've seen for much of this year has made U.S. assets of the best value we're seeing per pound for pound for the earnings growth they're getting. So earnings growth is the only thing that's going to get you there.
That was Matt Miskin from Manulife. John Hancock speaking about earnings growth right now. And let's continue that conversation with Smead Capital CEO and portfolio manager Cole Smead joining us at the desk. Great to see you in person.
Good to see you guys.
So we think of you as a value guy. We know you like energy. We know you like financials. And we were playing around with 2025 estimated EPS growth. I believe we have a bar chart to illustrate the point. You take a look at what's at the bottom. It's energy, negative nearly 15% expected. You compare that to big tech up top at 20%. How do you square that into a bullish position in energy?
Yeah, the weird part is Wall Street loves earnings, and Wall Street analysts are really good at doing one thing, which is predicting quarterly earnings. That's what they're great at. It makes me think that as a child, if they drop too many things, they'll call out the number of things they drop, and their parents are like, you should be a sell-side analyst. That's really good. So I say that because ultimately, what's going on in the stock market right now is the returns, the cash returns on capital of the S&P are actually in decline. Now, why am I saying that? Because earnings, you only depreciate a small piece of your capital base. In reality, what do we know what's going on with AI? They are CapExing this at obscene levels. I'll use Meta, they're at $70 billion just this year. And so why I'm pointing that out is let's use a company, a cheap stock, quote unquote, to some value people like Google. Google's probably going to do about $53 billion of net cash creation, but that's taking $73 billion of free cash and backing out $20 billion in stock-based comp. Wall Street doesn't count that.
Right.
So I point that out because on a business like Google, an asset light, one of the truly great monopolies in the asset light world, is only actually producing about 16% cash returns on book. Now, what's weird about that? That's too low. That's way too low for a business of that size and that scale. You get that at 6 times book and 40 times free cash. I can go and buy oil companies that are producing 11 to 13% return on invested capital, and I pay less than invested capital.
All right, I got to wrap you up, but we're going to bring you right back. Cole Smead staying with us. This is Open Interest. Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are, I think hovering is the word right now. I'm not supposed to say churn, but that's really what's happening in this market. S&P futures are up, but only 0.1%. NASDAQ even less than that. And the problem is the market is in waiting mode. It wants to see what the U.S. and China get out of their meeting in London. It wants to see the CPI report tomorrow. Really, I think, wants to see the 30-year bond auction on Thursday, as hard as that is to believe. By the way, Ford ringing the bell on the New York Stock Exchange, which is fairly interesting. But this is, I think, fascinating. Lincoln Electric is ringing the bell at the NASDAQ. The company's like over a century old. I think it may be 150 years old. It's been listed on the NASDAQ since 1995. Not only are they crushing it in the last 5 years, as I always check with my comp function, up 150%, in the last 30 years, they're up with reinvested dividends 5,000%. So absolutely crushing it.
Yeah, really electric performance there from Lincoln Electric. I had to. Let's talk about Meta, though. This is an interesting one. Not exactly up 5,000% today, but it's up slightly higher on news potentially that Meta is recruiting dozens of experts to achieve artificial general intelligence that theoretically can perform tasks as well as humans. As we talked about with Caroline Hyde and Mandeep Singh, this is a clear priority for Mark Zukerberg, who is personally hiring the team and arranging desks to sit near him, which sounds a little bit intense. It was up higher pre-market, but still a gain of about 0.5%, Matt Miller.
All right, Apple's Worldwide Developer Conference, not that you would know it, it's happening right now. It's not impressing analysts on the street too much. As you can see from the stock here, it's up only 1/3%. Even though Apple has announced such exciting deals as advancing its already formed partnership with OpenAI and refreshing its operating system. So we'll continue to watch that. And in fact, Bloomberg Tech co-host Ed Ludlow, I'm going to say, went to it and then decided to leave. He's back in San Francisco. So Ed, so boring that you just peaced out?
Yeah, a little bit, but I would put it in the context of yesterday's drop on Apple being more substantive and significant than probably we discussed. Like literally one session a market does not make, but just go to 1 p.m. Eastern time on the tape. And when Craig Federighi, Apple's software chief, started speaking very early in the presentation, he said, we have no updates on Siri. They will come later in the year, and stock goes straight down. So, you know, I actually find the rebound today a little bit more interesting. And the reality is this, that Apple has a much catching up to do in AI. None of the announcements from WWDC, other than third-party access to its own LLMs for developers, because that's important for Apple's ecosystem, moved the needle, and we are in waiting mode with it. And yeah, it underwhelmed, for sure.
All right, Ed, I guess that's all we need from you now. But
Sure.
we will
Bye.
stay tuned to your program today. Ed Ludlow, co-host of Bloomberg Tech, and there's a lot to watch in tech today, right? Because you've got Mark Zukerberg apparently like hosting dinners to hire the 50 smartest people and sit them near him. At Meta, they also are investing $10 billion in an AI data startup. Plus, you've got TSMC's massive jump in revenue. I think it was a 40% jump
40% in Meta,
in one month. So there's a ton to watch, Ed and Caroline, for today.
Yeah.
But probably just not Apple.
But there's a ton to watch when it comes to us and the discussions that we're going to have.
Yeah.
So let's keep it going.
Yeah, Cole Smead is still with us here, CEO and portfolio manager at Smead Capital Management. And Cole, I just wanted to, we were talking during the break about this idea that now is a good time for aggressive, smart financiers in the oil patch to go and round up some of their maybe tired old competition.
Yeah, it's to use Boone Pickens' old line, you can dig for oil cheaper in the New York Stock Exchange or the Toronto Stock Exchange than you can in West Texas, okay? I'll give you a very recent example right now. There's a company up in Canada called Strathcona Resources ran by Adam Watrous. He's a very successful investor, counter-cyclical investor. He's out buying a business called MEG. They're both heavy oil businesses. What Adam just did is sold gas assets up in the Montney to buy heavy oil. That's interesting because the market seems to be really excited about gas for AI and electricity. So what is he doing? He's arbing even the difference in the gas to oil market. So he's doing that. People are kind of caught off guard, and really he's going to close that deal. It just shows you that the smart money is moving on this. Once the Hess, deal with Chevron and Exxon gets settled out, whoever loses that will go after an asset. That looks pretty obvious. So we're going to continue to see consolidation. But again, the question is who wants to own and run the future, and who wants to just kind of watch their kids as they retire.
Yeah. So we've covered energy. I also see when I take a look at some of the names that you're feeling good about, I see a lot of builders in there, which also caught my eye. We talk all the time about what a weird spot the housing market is in. What is the case for home builders at this moment? Yeah,
so there's about 5 months of supply and demand meeting right now, which is pretty historically normal. I'll give you a little stat. You'll see if you go out on X, you'll read a lot of these super bearish articles on housing and whatnot and write-ups. I call those bear porn, for lack of a better term. And they'll say, oh, look, we've never had more new homes for sale than at any point since whatever date, okay? You name the date. 75% of the new homes for sale have not begun being built or are not finished. So the idea that we have this plethora of new homes out there that are just unsold, it's just not true. I say that because 5 months of demand-supply meeting is on lower demand right now. So it's a very balanced market. People are as bearish as all get out in the space. And again, we still have this tight supply looking back. We have the same supply as in 19. That was a good time to buy a house. That was a good time to be an investor. Luckily, everyone thinks that affordability is going to kill the golden calf again. And we've made a lot of money betting against Wall Street on that before.
I'm interested to know what you think about cars, because I don't see a lot in your holdings. But I remember when you guys were into O'Reilly, for example, and I guess new car prices are so high that people are going to be buying used cars. They're going to be fixing up their old cars. Do you care about that right now?
Yeah, we've actually never owned O'Reilly. We've looked at it a lot in the past. O'Reilly, AutoZone, those have been wonderful businesses. Here's how I think about this. Main Street's going to beat Wall Street. That looks obvious to us. We don't think the S&P will make good returns. We think inflation will beat the S&P, okay? Now, I point that out because look at our fiscal budgets. What are we effectively doing? We're creating this buffer and stabilizing the economy. Where's that recession that we've been hunting for years? We're not very good at finding recessions, and we're not very good really creating them. Now, why? Government spending, okay? So the economic fears drove a lot of security prices. Housing, oil, consumer-oriented businesses, that's where a lot of security prices were driven in April. The low on the energy stocks was not the low of oil, It was the height of economic fears in early April. So I point that out because that's the opportunity. I think really meeting Main Street where it's at, but again, that has nothing to do with Wall Street. That has nothing to do with the bond market necessarily. We are handing out a lot of fiscal largesse, and so far you can't kill this economy, which is bizarre to say.
By the way, you and your father have always been kind of acolytes of Warren Buffett, and he is passing the torch now. Were you at the meeting?
Yeah.
What do you think about that? How does Berkshire look to you?
So I was at the meeting with my dad. We left 15 minutes before the meeting ended. And we were out in the concourse, and we got there, and we looked at each other. Just one of those things I'll never forget in my career. We looked at each other in kind of like a moment, and it was like, it's the end of an era. We just kind of looked at each other, and we like understood. Funny enough, obviously 10 minutes later, Buffett announced he was stepping down as CEO at the end of the year. But we just kind of knew that mentally. And that's why I'd gone to the first meeting in maybe over 10 years for myself. So I think it is an end of an era. I think there's a lot of questions we asked there. Ultimately, you have the greatest investor of all time. Greg Abel's a very good operator. He's wonderful. I think one of the questions could be asked is, could he consolidate Oxy? Because he knows a lot about the FERC approvals that would be required for that, things of that nature. And they're not going to invest in the utility business. They made that very obvious. It'll be interesting to see where that goes. But again, for a long time, you've been able to compound capital at higher rates than other places. But look at what Buffett's doing. Buffett's arguing this is like 2000. And if I had my best guess, we're somewhere between March and August of 2000. We almost got back to the old high in August. Everyone just remembers this nasty bear market for 2 to 3 years. But there was a massive bear market rally 5 months in, and you know what happened? People got crushed. That's what this looks like to me.
Well, I'm glad that we're on the topic of Buffett, because this is one of the questions I had coming out of that announcement. You know, you mentioned that Greg Abel, obviously very competent as an operator.
Yeah.
He's not classically an investor like a Warren Buffett, like a Charlie Munger. And I wonder how you think about that as someone who so closely follows this company.
Yeah, if I was going to, it'd be great to sit down with Buffett. He's not going to take the time. He's got less time, and, therefore, why would he sit down with me? Ted Weschler is who I'd really want to visit with there. I think Ted Weschler, if I look at, what he's done in the past, what his style of investing is, again, he has a middle markets M&A background. He has really a financier approach to this. I think that's, but then again, we're not allowed to hear from him at meetings or, whatnot. He's done some select podcasts and done some select comments here or there. But Ted is kind of, in the back 40 of the discussion at Berkshire. I'd love to see him up closer. But again, that's just because I think he's a really outstanding investor.
All right, Cole, it's always great to see you. Really enjoyed this conversation. That is Cole Smead of Smead Capital. Meanwhile, let's get a check on these markets and specifically the makeup of this rally, because the S&P 500, it's up a little bit more right now. We are firmly above 6,000 at the moment, higher by about 0.2%. You take a look at the breadth. It's pretty good. We have more than 300 names in the green right now on the S&P 500. You take a look at what's leading. Meta, as we've been talking about. Tesla, too, a little bit of a rebound there after a pretty bruising week. Apple, Eli Lilly. What's not doing so hot right now, you do have the likes of Microsoft and Berkshire Hathaway, funnily enough, as we were just discussing, down about 0.5%. Not big moves overall. Let's take a look at the sector makeup, though, because you see up at the top, for Cole Smead, we have energy up by 1.2% at the moment. Communication services, a lot of that is coming from Meta. And there's not too much on the downside. Again, small moves overall, but the losers of today at this moment are industrials and financials.
All right, so there's a picture of what the stock market looks like. 10 minutes into the session, it does seem like we're in wait-and-see mode, and there's a lot that could come out and move this market, especially on trade. And we're going to talk about that when we come back. Boeing has struck record deals as a result of these trade talks since Liberation Day. We'll discuss the pros and cons of the jet maker as a bargaining chip with Jefferies analyst Sheila Kahyaoglu. This is Bloomberg Open Interest.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Mace Rich is getting upgraded to a buy over at Mizuho. The firm says that the mall owner offers an attractive risk reward and highlights its productive mall portfolio. Next up, Wall Street upbeat on that yesterday news of Warner Brothers Discovery's separation plan. The stock getting upgraded to a buy over at Huber Research. Benchmark also says it's an aggressive buyer on the announcement, and also KeyBank calls the spinoff positive. Shares down a little bit today, but they had a big day yesterday. And finally, we talked about this a little bit earlier, McDonald's getting a double downgrade to sell over at Redburn. The firm says that weight loss drugs are suppressing consumer appetites and presenting an underappreciated longer-term threat. Matt, we think they're a little bit late on this call, but still, shares are down at 1.3%.
Yeah, I mean, it seems like GLP-1s have been out for a long time, and a lot of people who abuse McDonald's have started to take them. So I suppose that could grow, right?
Yeah.
I still want to get a hold of some of those, but I was never going to go to McDonald's anyway. Let's talk about something else that's very big. Boeing has emerged as a bargaining chip for U.S. trade negotiators. The plane maker has been tapped for deals with Qatar and the U.K., while China has lifted its ban on Boeing's jet orders. This has sent the stock soaring in recent weeks and prompted an upgrade at Bank America. Let's bring in Jefferies analyst Sheila Kahyaoglu, who has a buy rating on the stock. And I guess, Sheila, there's really only two to choose from, right? The other one has already had an incredible run, up 175% in the last 5 years, whereas Boeing, like what we just saw, is all of its gains for the last 5 years. So is this the idea that they can play catch up now?
I don't necessarily think Boeing's a momentum stock, but this is a global duopoly where global air traffic grows at a rate of 6% per year. And the number of aircraft we need is growing, 10% CAGR through 2040, essentially, both narrow bodies and wide bodies. So we've under-delivered for aircraft over the last 5 years, given the MAX grounding, given the pandemic. And basically, air traffic at the end of last year in 24 was where it was in 2019. So we've missed out on 5 years of growth. So we're sort of starting up on those deliveries. Boeing is gaining momentum in its 737 deliveries and its 787 deliveries, but they're half of what they were still at peak. And so that's what's providing the runway, and the share price up 60% since April 1st lows, given the tariff talks.
So you're positive on Boeing, but I'm curious to fold in the trade backdrop into all of this. It's day 2 of trade negotiations between the U.S. and China in London. We know that China has halted orders of Boeing, and you talk about this favorable backdrop and the momentum that they could gain and pick up going forward. But how big of a wrench could be this fact that Boeing is starting to be used as a negotiating chip?
It's actually a huge one. Aerospace is a $100 billion surplus in the U.S. It's one of the only manufacturing surpluses in the U.S. So we were on Bloomberg back in April, and one of my favorite notes we've written is how Boeing could be used as a positive chip in tariff negotiations. It's easy to buy a $70 million, $200 million aircraft and chip away at your deficit. China hasn't ordered a Boeing plane since 2017, but that doesn't necessarily matter. Because given it's a global duopoly, we need 1,700 new planes per year. So you could 50-50 that between Boeing and Airbus. China could take 15% of that demand and give it to Airbus, and Boeing still has other carriers that could pick up from. And the air show next week is a big catalyst for that.
Isn't this company just broken, though? I mean, they haven't been able to figure out space. They go like double overtime, triple over budget. They haven't been able to figure out Air Force One, to the point that the president has to go get a used plane from Qatar, and the 737 is just constantly a disaster. Like, the last great plane they made was the 747, and when was that? That was like in the 80s and 70s?
I don't know if I would call the 747 the last great plane. I would say the 787 is pretty awesome, but in general, I would say...
Last iconic plane that they made, right?
It's a global duopoly, right? So no one else could build planes. Embraer's out there. They have the regional aircraft, but aside from that, it's Boeing and Airbus that you have to choose from. So it's quite difficult building aircraft. The engine is the other big piece, which we are very bullish on GE as well. That stock is running 15% of targets. They're going to have an analyst day next week where we think they could raise guidance quite a bit and even double EBIT in our bull case scenario from 24
But Sheila, what has been the problem at Boeing? Do they have way too many employees? Do they have so much management that doesn't really know what it's doing? Do they need an Alan Mulally again? Like, what's wrong with this company?
So the stock has actually been performing since Kelly Ortberg took over in August. They had a bit of issues in the second half, given they had the strike. They hadn't negotiated a labor contract since 2008, so that was pent-up anger. But they've been doing well, and Kelly Ortberg and Stephanie Pope, who runs the commercial business now, really have been focused on 6 KPIs. So what makes an employee's life difficult? I think that's what we all enjoy, when somebody appreciates what makes our life difficult and fixes it. And they've been very much focused on that. I was in Charleston 2 months ago, and it was simplistic changes. Instead of reading an aerospace manual that might be outdated and difficult to understand, YouTube videos on how to assemble parts if you troubleshoot. So just simplifying things for the employee workforce is what we are hearing and seeing.
So Ortberg's turnaround plan, it seems like it's starting to bear fruit. You can certainly see that in the stock price. I do want to get your thoughts on the state of defense spending, because you cover Boeing, but you cover a number of other names as well that seem pretty reliant on defense spending. Lockheed Martin comes to mind, for example. And I mean, you think about all the wrangling going on over the tax bill right now. Going forward, what's your best guess as to what defense spending actually looks like?
We're not bullish defense. That's one area I come on all the time and appear very bullish on Boeing and aftermarket names and GE. But the one area I'm not bullish in my coverage is the defense primes. I only have one buy rating. It's LHX. The reason for that is, even though the defense budget has grown over the last 5 years, and no one would have guessed it would have essentially gone up 40% over the Biden administration, earnings are not growing for the defense primes. A lot of these contracts that are growing the revenues come at a loss position or lower margins. And that is really a deterrent to profitability growth and EPS momentum for these names. So yes, there's several top-line bullish catalysts, whether it's the budget, whether it's the reconciliation bill, whether it's European defense spending going to 5%. But the names have not been seen, they haven't been able to leverage that.
Yeah, I'm interested in who you think is going to be the beneficiary of like the German rearmament, right?
Two names.
And Canada apparently is going to build an army. So like, are they going to spend real money? Germany certainly looks like it's going to.
Yeah, I think I think that European defense names will go up to 5%, and 3.5% of that will be on equipment. Where I think the spending will come into play is mostly missiles, not so much aircraft, because you'll pick the home team. So you might not pick it. F-35 backlog is okay through 2030. Nothing to say about that. But you might pick a Eurofighter instead of an F-35 because you want to support the home team. Where we think you could see beneficiaries of that is Raytheon Defense. They have exposure 14% sales to Europe, and as well as Northrop. We were just with the management team last week. They sell a communication system for missiles called IBCS. Their first sale was to Poland. They're working on 12 other countries.
Such an interesting turning of the tables when it comes to global defense spending. I mean, you talk about Germany all the time, and I mean, you compare that to how Germany classically has been when it comes to defense, and Europe as well. Just a fascinating discussion, Sheila. It's always great to see you. Really appreciate you making time. That is Sheila Kahyaoglu of Jefferies.
And she's going to Paris.
Yes, she is.
To the air show. Guy Johnson will be going there. I imagine we're going to be getting a ton of coverage and a ton of red headlines out of the air show next week.
I hope so, because there is plenty to talk about. So we'll keep an eye out for those headlines. But coming up in the next hour, we have the CEO of Beata Technologies, which has accomplished the first passenger flight by an electric aircraft in the U.S. We'll discuss then. This is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check of what's going on in the stock market right now. Kind of in wait and see mode, like investors have their hands in their pockets. We're looking at gains. The S&P right now at 6,015, and the NASDAQ right now at 20,836. The interesting thing here is, and I'm going to call out my producer, Will Shaker has such genius ideas sometimes. This may seem like a little thing, but it's big to me. He put Novo Nordisk right here on top of McDonald's, which is great because an analyst from 2023 downgraded MCD shares on GLP-1 concerns. You see all the tech stocks up, Tesla, Meta, and Apple. Even Apple up 0.5%, as Ed says, rebounding from the drop yesterday. And then Stellantis right now gaining 2.25%. They're going to bring back the Hemi. Coming up in the next hour, Seema Shah helps us break down the winners and losers from trade developments. This is Bloomberg. We are 30 minutes into the trading day, and we're still holding over 6,000 on the S&P 500. The arrows are green.
Yes.
Welcome to Open Interest. I'm Matt Miller.
And I'm Katie Greifeld. Sonali Basak is on assignment. I will say it's a bit of an uninspired trade today. You take a look at volume, it's 6% below its 30-day average right now because, as you said, everyone's just sitting on their hands right now.
Yeah, I mean, there's a ton of news to talk about. Like, I woke up with a wealth of stories, just mostly focused on AI and tech, and obviously we're waiting for London right now.
Right.
But in terms of the market movement on the index level and really even individual movers, there's just
yeah, maybe something will change when we get CPI data tomorrow. Maybe something will change with those treasury auctions a little bit later on in the week. But we're going to talk about those U.S.-China trade talks continuing in London for a second day as the two sides really look to ease tensions over key tech and industrial goods.
Also upping the stakes in Los Angeles, President Trump deploys 700 active duty Marines on U.S. soil as anti-deportation protests spread beyond L.A.
Plus, a historic flight. An electric aircraft flies passengers from the Hamptons to JFK for the first time. We'll speak to the CEO behind the aerospace startup Beata.
And stocks are looking for a third day of gains. Mike Wilson from Morgan Stanley sees more upside from here despite all of the trade uncertainty.
Don't ignore everything, but ignoring the headlines is probably a good strategy and just focus on the data has turned up for the most part. And I think, I don't know where the trade negotiations are going. Nobody does. Sure. But I think it's very unlikely we're going to go back to where we were, a month and a half ago. Like, we bottomed in terms of the pain of that initial announcement and how bad those tariffs were. So unless it really re-escalates in a negative fashion, I don't think the trade issue is even going to be enough to kind of take the momentum out of this market right now.
Joining us now, Seema Shah. She is Chief Global Strategist at Principal Asset Management. Seema, Mike's not the only one who's bulled up, and his driver really is earnings growth. We heard from Matt Miskin this morning on Bloomberg Surveillance as well. He also is saying, hey, we're getting these, quality companies looking at 12 to 13% earnings growth for cheap. But isn't that because of the uncertainty that looms? Isn't that because of the potential of a trade war? Isn't that because of the potential of a drop in GDP growth?
Hi, Matt. So, look, I think this is a tough environment, certainly for investors. There's a ton of uncertainty, which we don't think is going to dissipate. So I think that's going to be a continuous hurdle for investors. Now, to Mike's point that he was pointing out earlier, I mean, the fundamentals are fairly strong. I'm probably not as bullish as him in that earnings are good right now, but we are expecting there to be a slowdown. So come the end of summer, I think there could be even more market complacency underway because the data hasn't yet weakened. And then when it finally does, as I said, in late Q3, early Q4, that to me is a bit of a pothole potentially for markets. And even if, let's say today, we do start to hear really good news coming out from these US-China negotiations, I think it would be too early to say that this is the end of it. And if anything, that uncertainty is really going to persist. So I think there's going to be continuous weighing on fundamentals going forward.
Yeah, it's a fair point. Even if we get progress out of these U.S.-China trade talks, it seems like we're just trying to get back to where we were in May when we got that agreement in Geneva necessarily versus just pushing forward to actual progress. But I want to get specific at the industry level when we talk about earnings, because we have this great bar chart of 2025 estimated EPS growth right at the top. It feels like something we've seen a lot over the past few years. You have tech with a 20.2% growth expected. At the bottom, you have the likes of energy, consumer discretionary, but it seems like it's tech that is what the sell side is expecting to lead this market, at least from an earnings potential, Seema.
Yeah, and I mean, I think this analysis is also really important, remember, because I think there's a ton of fatigue starting to feed into investors. Is kind of feeling that they've been too much in response mode rather than trying to look through some of the noise. So it is important to try and think through what are the vulnerabilities within all of these industries. And it's interesting that tech is at the top because actually from some perspective, technology is the sector which is most vulnerable to all of the tariffs, export controls, et cetera, which could come in. But of course, just as those earnings, the EPS forecasts are showing, there is some hope certainly that those balance sheets are so strong that they can continue to deliver. And actually within technology as well, there are certain segments such as software, internet companies, which we consider to be less vulnerable than the others. Software, for example, has reduced its exposure over the years to China, so their supply chains have already diverted. and internet companies too feel to be somewhat less exposed to tariffs. So there are segments certainly within technology. I think we want to be careful about the whole bunch, but they certainly do benefit from just general balance sheet strength, which is likely to continue over the coming years anyway.
Seema, I want to ask you about the interest rate situation, and because normally I don't care about Treasury auctions, but I'm watching closely to see how the 10-year does today, and especially how the 10-year auction is tomorrow?
On Wednesday.
Tomorrow.
Yes.
I keep thinking it's Wednesday today. The 10-year does tomorrow, and the 30-year auction. On Thursday, we auction off $22 billion worth of debt at the Treasury. And how important is it to you that we see yields contained like under 4.5% on the 10-year, under 5% on the 30-year? What happens if they go above that?
Well, kind of going back to what we were saying earlier, is that, look, there are some potholes coming up in the coming months, and there is maybe some complacency with regards to the economy. So one of the other vulnerabilities within there then is actually what happens to yields, because if you do see a continued sell-off, as you said, 5% for 30 years going above that level, a kind of 450, actually probably more from our perspective, a 470 level is the threshold that we'd be concerned about for 10 years. That would mean that you're less likely to see that multiple expansion going through for equities. So it is a vulnerability. There are actually a lot at the moment of concerns that we have in the near term for equities. And as you said, fiscal concerns, watching what the demand is for auctions, these are all going to be things which have the potential to sway and move the market, at least in the near term.
Well, before we get to those very exciting Treasury auctions, we have to get through eco data tomorrow morning at 8:30. We got the latest CPI report. And I mean, if you think back to that chart we just showed about earnings expectations for 2025, consumer discretionary was way at the bottom here. And there's a lot of concerns about the state of the U.S. consumer. And I'm wondering how you're going to be reading these numbers tomorrow with that in mind.
Yeah, and I think what's happened is actually coming into the year, and certainly in February, there were real concerns about the state of the consumer and how much it was likely to slow down. And then I think in the last 2 months, what investors started to really learn is that there is a little bit more resilience in the consumer than expected. And if we think that for the consumer, what's really important is going to be the state of the labor market and what's happening to inflation, it certainly makes sense that tomorrow's CPI print is going to be important. To some extent, though. So from our perspective, we're not anticipating the impact of tariffs to really feed through to the inflation data until another 2 or 3 months' time. So we're expecting a bit of an increase, but nothing to be particularly market moving tomorrow. It's really once you get into the summer months that some of that vulnerability does start to show up. But even then, from our forecast perspective, we're only anticipating a peak in inflation of around 3.5% for core PCE this year. For a consumer, that is okay. I mean, I think they can absorb that. Probably the bigger risk for them is what happens to the labor market in terms of cracks as we go through the rest of the year.
Yeah, I mean, I'm pretty tired out from the inflation we've had, right? Prices have climbed to a level that's already unaffordable. And if they continue to climb, that's going to be a real problem. I mean, for me and probably for other consumers as well, Seema, and maybe for the Fed, right? If we get a rise back to 3% or more on the PCE, does that tie Jerome Powell's hands at a really important time? If you say 2 or 3 months from now, that's right when everyone expects the cuts to be in full force.
Yeah, I mean, I think from the Fed's perspective, they have a really, really tough situation. I mean, right now, the economic data is telling them that there is absolutely no urgency to cut rates. You also have inflation already above target, and then you have expectations for inflation to rise over the coming months because of tariffs. And of course, inflation expectations, yes, they're not unanchored, but that's not something that they can take their eyes off. So certainly from our perspective, we're not thinking that the Fed is going to be cutting anytime soon. We are expecting to wait at least until Q4 before they resume very, very modest rate cuts.
All right, well, we get those CPI numbers, CPI, not PCE, but still, maybe that'll help answer some questions tomorrow. Seema, great to preview it with you. That is Seema Shah of Principal Asset Management. Meanwhile, we got a host of AI news out this morning. So with that in mind, let's take a look at some of these single stocks moving this hour with Bloomberg Equities reporter Ryan Vlastelica joining us from Chicago. Start off with Apple. We keep making fun of how little we got out of WWDC, but the stock is up a little bit this morning, Ryan.
Yeah, up a little bit this morning. It did fall yesterday. I think it closed down about 1.5%. People were underwhelmed by the WWDC keynote presentation yesterday. I don't think it was people were really anticipating some kind of like killer app, so to speak, with respect to AI, but there was a little bit more optimism that we would see some progress or maybe, more exciting partnerships with other companies there. It seems like I saw one analyst note this morning say that they failed to clear a low bar. So that's kind of where we are with Apple. People continue to see that they are behind the curve when it comes to AI. That has been something that has been weighing on the stock generally this year, along with other issues like trade and tariffs and so forth.
Meta has been, obviously since the Bloomberg scoop over the weekend that they're going to invest $10 billion in an AI data startup. Alexander Wang, apparently the most famous 28-year-old in tech, is bringing in another 49 of the smartest people in the world going to help this company really dominate in AI?
Well, they've been doing very well with AI so far. We've really seen them show an ability to use AI to improve their growth and their financials when it comes to, time spent on apps, when it comes to improving the sort of ad targeting and so forth like this. So they are already pretty aggressive in AI, and they're already showing a pretty strong return on it. I think adding to that, this just shows how this is such a priority for Meta, and it shows that they're really, showing no signs of stopping. They've been very aggressive when it comes to CapEx with investment. So certainly not a surprise here, but just really speaks to how this is such a priority for them.
And Ryan, before we let you go, we probably haven't talked enough about TSMC today. They had a big May when it comes to revenue. What exactly did we learn from this company?
So what I've seen so far is that people anticipate, just based on this monthly sales data, they are very likely to beat current consensus expectations for their quarterly revenue, basically saying that even if we saw some of the worst seasonal trends on record when it comes to the June sales, that they would still be able to top quarterly expectations. So a positive read there, certainly a sign of resilient AI demand. There's some debate about how much this is sort of a pull forward related to tariffs, but ultimately a pretty strong monthly sales report.
All right, Ryan, thanks very much for joining us. Ryan Vlastelica there in Chicago, talking us through some of the tech stocks. Mm-hmm. You don't want to talk about peanut butter and jelly right now.
No, I really do. I want to talk about Smucker's. Let's just hit on it briefly because shares are now down by the most intraday since 2006, falling at one point by 12%. They reported earnings and they weren't good. Basically, the takeaway there was that they're going to have to hike prices and they expect that to weigh on profit. So it's not all peanut butter and jellies for JM Smucker.
Yeah, the company has done, over the past 5 years, check out this comp chart. It's just ugly.
Yeah.
Over the past 5 years, total return, if you reinvested your dividends, they're up 6%, but way underperforming the market, and basically flat for 5 years is not what you want when you invest in a company hoping for growth.
Well, recently the problem has been coffee prices. They have Folgers, they have Cafe Bustelo, which is an instant coffee that my mom enjoys, but the coffee costs have really been hurting those parts of the portfolio.
All right, interesting story. I'm sure we're going to delve deeper into it because she's a Smucker's gal here.
I do like it.
Coming up, investors eagerly awaiting any signals from the U.S.-China trade talks. We'll give you a live report from Lancaster House. Next, this is Open Interest. Now let's get to high interest. Look at what's making headlines around the world. Blackstone plans to invest as much as $500 billion in Europe over the next 10 years, highlighting the continent's growing appeal to investors during geopolitical uncertainty. The CEO, Steve Schwartzman, joined Bloomberg's Francine Lacroix in an exclusive interview to talk about the news.
And we have a very positive view of the future here in Europe. We think we're going to be able to invest $500 billion over the next decade in Europe. We see it as a major opportunity for us. They're starting to change their approach here.
Blackstone is also looking to the Middle East as an investment destination attracted by the rapid growth of cities like Riyadh and Dubai. Citigroup will put aside hundreds of millions of dollars, more than it did last quarter, I should say, to account for potential losses on loans and credit cards that it issues to its clients. It's a sign of worsening consumer health. Citi is one of the largest U.S. retail banks serving millions of clients in its home market here, though it's tilted towards consumers with higher credit scores. And Paramount Global plans to cut about 3.5% of its workforce because of a continuing decline in the cable TV industry and the broader economic landscape. Last year, it cut 15% of its staff in a multi-round layoff. The company is trying to finalize a merger with Skydance Media. It's also dealing with a lawsuit from President Trump alleging that CBS News engaged in election interference. And the latest round of trade talks between the U.S. and China is underway into its second day right now. Earlier, Commerce Secretary Howard Lutnick gave Bloomberg his read on negotiations so far.
We've been all day yesterday, and I expect to do all day today. So they're going well, and we're spending lots of time together.
And that was Commerce Secretary Howard Lutnick speaking to our chief political correspondent, Anne-Marie Horjourn. Anne-Marie joins us now from Lancaster House. So, Anne-Marie, it's been about an hour since we last spoke to you. Have we seen any movement, either, in messages coming outside from the building, people going in and out? Has there been any sort of progress here?
Well, what we know is that both delegations are still in a room at the negotiating table. They broke for lunch, and they've been at the negotiating table since that break for a little bit more than an hour. We did have one Chinese communication official come out and say that it's business as usual, and they like to see engagement rather than not having engagement. We are still waiting to see what the agreement potentially is going to be today, what some of the sticky issues were. Going into this, Kevin Hassett, the National Economic Council director, had said that this is going to be a quick meeting, a handshake, and basically said they're going to get the rare earth minerals, they're going to get the magnets that the United States needs in the defense sector and the high technology sector, and there's going to be an easing of export controls, but not to the level of advanced high-tech chips like the H20 from NVIDIA. We are still now 2 days in talks in London and unclear where Washington and Beijing are going to land. At a minimum, everyone really just expects these two countries to go back to what they agreed upon just 4 weeks ago in Geneva.
Anne-Marie, where do we stand on tariffs? Just remind us, what are the levels right now? Are they the same as they were after that meeting in Geneva? And is there any likelihood that they change?
30% for Chinese imports coming into the United States, 10% U.S. imports going to China. That is the level they are at right now. It depends also for some specific products, but overall, that's where the level is right now. That's what they agreed upon in Geneva. That was the big détente. But remember, this was a 90-day reprieve. So in mid-August, those tariff levels could snap back to what we saw following Liberation Day, which was north of 100% for some products when it comes to Chinese exports coming into the United States, which basically was a trade embargo between these two countries, which obviously we had covered extensively when it comes to what was happening at the ports and Chinese shipments. But I would say that these negotiations today are not about the tariff rates. Really, this is about some of the other issues between the relationship between Washington and Beijing, most notably when it comes to really the red lines for both of these countries. Beijing controls 70% of the world's rare earth and magnets, and they definitely obviously want access to some of the semiconductors, some nuclear material, some of these export products that the U.S. put export controls on since those Geneva talks.
All right, so chips, rare earths, and de-escalation. Those are some of the key words to watch during these talks. Anne-Marie, really appreciate your reporting. That is Anne-Marie Horjourn. She is Bloomberg's chief political correspondent and the co-host of Surveillance. Meanwhile, let's go check on these markets just under an hour into this trading session. You can see the S&P 500 up tepidly right now, but it's above 6,000, higher by about 0.2%. Big tech, a little bit better. We're taking a look at the NASDAQ 100 up by about the same amount. I will say that the breadth is pretty good on this market. I know you're going to talk about that in the next block, Matt, but you have over 300 names in the green right now, but just small moves overall.
Yeah, and I know also that the breadth in this rally hasn't been that great. From reading our producer Dan Curtis's morning setup, he's pointed out that we're still 23% below the level that we were at the peak in terms of the number of companies at above their 50-day moving average or even above their 200-day moving average. So it's just a rally that doesn't seem to have that much conviction.
I will say we are slightly positive on a year-to-date basis, at least. The S&P 500 up about 3% or so. So even with that weak breath, as long as you have the right names leading the charge, namely tech, you can do okay.
I think about you when I see him talking about the equal-weighted USW, because right now we're still 5% away from an all-time high there and 2% away on the S&P 500. Sorry, I've got to get to the T's. Bloomberg will host its annual Global Credit Forum in Los Angeles as questions around trade wars, persistent inflation, and growing concern of a slowdown in the world's largest economy loom large. We'll hear from DoubleLine CEO Jeff Gundlach, among others. This is Bloomberg. Going to check on what's going on in the stock market right now with the S&P as our gauge and really the move screen as a dynamic look. You can see the volume, only 107 million shares. I think we're about 5 or 6% below the 30-day average for this time of day right now. We're only up about 15 points. But as Katie pointed out, the breadth is pretty strong. 339 stocks up, 162 down. You're not seeing a lot of movement. You know, in the percentage column, you see Tesla up 2.5% and Alphabet up 2%, which is pretty decent. In terms of the losers, Microsoft and Netflix are down. In terms of the industry groups right now, energy is the biggest winner. It's not the biggest winner year to date. And you've got industrials trailing the pack, although they are the biggest winner year to date. This is Bloomberg.
One area I'm not bullish in my coverage is the defense primes. I only have one buy rating, it's LHX. The reason for that is even though the defense budget has grown over the last 5 years, and no one would have guessed it would have essentially gone up 40% over the Biden administration, earnings are not growing for the defense primes. A lot of these contracts that are growing the revenues come at a loss position or lower margins, and that is really a deterrent to profitability growth and EPS momentum for these names.
That was Jefferies analyst Sheila Kahyaoglu speaking to us earlier on open interest. Meanwhile, one company that is benefiting from defense spending is Spire Global. The company sends satellites, which are about the size of a loaf of bread, into space to track atmospheric data to help drive data-driven decisions. Spire has contracts with the Canadian Space Agency and secured a 10-year contract with the U.S. Space Force just last month. Joining us now to discuss is Theresa Condor. She is the CEO of Spire. Great to have you with us. I want to start with defense spending because we just heard from Sheila Kahyaoglu saying that basically she's not too bullish about the state of defense spending going forward. And you think about your business, an investor could get worried about how dependent Spire is on defense spend, at least when it comes to the U.S.
Yeah, so I think a company like Spire is interesting in that we use our infrastructure to collect data sets once and then to sell those data sets multiple times. And so we're actually able to leverage a set amount of CapEx in that infrastructure and then continue to grow our revenue and our business. So it's a little bit of a different business model than what you would typically think of for defense primes. The other thing that is interesting is that a company like Spire is also selling quite a lot to commercial companies. So we're really going to be about half on the government side, which includes defense, but also includes civil government, as well as on the commercial side. And I think the other thing I would add there is that you have increasing amount of defense spending in rest of world, given the geopolitical situation. This always also creates quite a few opportunities for companies like us.
So what is your infrastructure? Tell us a little bit more about your business. Do you have satellites in space? Are you supporting data centers? What does Spire Global actually have in terms of infrastructure set up?
That's right. So we build satellites, as was mentioned. They're very tiny, about the size of a loaf of bread. We just launched our 200th satellite into orbit, and we have a global ground station, about 30 different locations around the world, that is used to communicate with those spacecraft and downlink our data. What we do is listen to the Earth, so we capture radio frequency signals that tell us information, for example, about the weather that goes into weather forecasting, that does tracking of aircraft around the world and helps with things like improving airport operations. We do things that are also more military and intelligence related, something like detection of GPS jamming and geolocation of where that's coming from. That's also something very relevant for the civil aviation sector, particularly in Europe, and a whole bunch of other use cases that touch on agriculture, that touch on insurance, that touch on energy. So not purely government focused by any means.
Well, let's talk a little bit more about Europe, because you mentioned that, okay, the U.S. defense spending landscape is one thing, but the rest of the world looks pretty good right now. I know that you have contracts with the Canadian Space Agency. You're joining us from Germany right now. Are you shifting more of your business, more of your focus to areas outside the U.S.?
So we've always had a pretty big focus areas outside of the U.S. That's been a part of our business from the beginning. And I think that just makes us in a key position to take advantage of this increased spending outside of the United States. As you mentioned, the Canadian Space Agency contract we have to build out their sovereign wildfire monitoring constellation that enables us to build technology locally in Canada, in Munich, as well as in Scotland, in the UK. We also have manufacturing capabilities, as well as in the United States. So that really lets us be positioned wherever there's going to be government spending and a desire to have locally built technology.
You apparently were on the New York Stock Exchange to take the company public in 2021. The stock has done poorly since then, Theresa. What do you think investors aren't getting right about your company, or what do you need to change to get that stock price back up?
So I think as a smaller company, we are very much impacted by what is happening across the sector overall and across the other companies in our space, rather than necessarily anything that our company does on its own. I think driving to growth is something that will continue to be important, as well as driving towards profitability, which has been something Spire talks about and is making movements toward. I think at the end of the day, we have a great team, we have great technology, and we need to keep on executing as we're doing. And at the end of the day, investors like the story and will see the progress that we're making.
All right, Theresa, great to spend some time with you. Really appreciate it. That is Theresa Condor. She is the CEO of Spire Global. Meanwhile, let's go look at some of these single stocks moving this hour. We're just about an hour into the U.S. trading day. We'll do that now with Bloomberg cross-asset reporter Isabel Lee sitting to my left. Let's talk about McDonald's.
This isn't a good day for McDonald's. Shares are down by more than 1%, and that's after the burger chain was slapped with its first and only sell rating. So Redburn Atlantic said that consumer patterns shifting are cause for concern. I mean, we kind of saw this coming with all this weight loss drugs really coming.
Kind of. I mean, we definitely saw it. This was all we talked about for a year in 2023.
It was a long time ago, though.
But this is a concrete example that with a sell rating, the stock reacted. And analysts are actually split because we have 22 buy equivalent ratings, 18 hold, with an average price target of $332. So Redburn slapped McDonald's to a street low of $260 per share. So, I mean, they're really pessimistic there, and they're saying that they could expect as much as $428 million of annual impact to revenue, which is about 1% of system sales. But you're right, fine, we saw this coming.
Two things interesting that you just said. One, the word slap. I love that verb because it was a double downgrade. Yes. Also, the fact that you point out that this is McDonald's only sell rating. This was a pristine stock, at least from the sell side perspective.
I pulled up A&R as soon as she said that because it's shocking. You know, there's 41 analysts covering the stock and only one sell rating. When you say slap, I think about slap at the base.
Do you?
You know, slap at the base.
I think about, you know.
Same.
Novo Nordisk shares are higher. Is that because one analyst finally realized that their drugs work are working?
No, it's because we have an activist hedge fund, Parvus Asset Management, building a stake, and that's as we know the drug maker has been struggling, and it seems like Parvus is interested in influencing the appointment of the CEO. I mean, you've interviewed the CEO. His departure last month came as a shock, especially because of the company's culture. I mean, in 100 years, they only saw 5 CEOs, so that was really surprising to a lot of folks. And now with this possibility, investors are cheering that, so maybe they'll have a new leader. And we know that Novo's drugs, Ozempic and Wegovy, have become household names, but they've really struggled to keep up with their rivals.
Lars Frogard Jorgensen is his name.
It's an enjoyable name to say.
The former CEO of
And I feel like
Novo.
he did a pretty good job there. I mean, their stock is
way
better than it was when he came in.
They have high standards over there because, I mean, the stock has underperformed, but he did oversee it at a time of fantastic growth. But we'll have to see how that story develops now with an activist involved. Let's end, though, on J.M. Smuckers. Smuckers, at one point falling by the most since 2006 after reporting earnings.
Yes, and now it's still not looking good, down by 14%, so it's not a good day. The company said U.S. tariffs and increasing coffee prices will really weigh on their profit for the coming fiscal year, estimated at $1 a share. So Citi analysts said that they were already concerned prior to this report, but then when they saw the report, it was well below even the most bearish outlooks that they've heard. So that's definitely not a good thing to hear. And this is a big deal for Smuckers because they oversee the brands Folgers and Cafe Bustelo. I don't drink those two. I'm an espresso drinker. But it's not doing well because last year the company generated a third of its revenue from coffee, and yet coffee prices were already increased 3 times since June, and they will increase it further in August. So what will we drink in the morning now?
I will just continue to buy Starbucks cold brew. Have you ever had an
Folgers. It's Folgers.
I know, but I'm not going to drink that.
The best part of waking up is Folgers in your cup.
That's what you drink.
No, that's just
It's just a slogan. Yeah. Have you ever had an Uncrustable?
No, I haven't.
I didn't think so.
It's very American, I think.
It is very
I think
American.
the NFL eats like hundreds of thousands of Uncrustables every season.
That you can see that in the earnings.
It's like a massive amount of carbohydrates. It's like a huge energy kick.
What I need.
And I bought a box. They're frozen. You've got to defrost them first.
Wow. Yeah, just put them in the fridge, you know. I keep them in the fridge.
Oh, you eat them at home?
Okay.
Yeah.
That's awesome.
I legitimately love Uncrustables.
And then you eat them cold or microwave them.
Well, you're not supposed to microwave them because they explode.
I'll try one. I'll try one.
Put it in the microwave.
I love PB&J. So, Isabel Lee, great having you on the program. Thanks so much for joining us. Coming up, it's the first flight of its kind to land at a New York City airport. We'll speak with Kyle Clark, Beata Technologies CEO, about the company's electric passenger aircraft. This is Open Interest. Last week, Beata Technologies flew its fixed-wing electric aircraft from the Hamptons to JFK Airport with a passenger in it for the first time. Well, just a demonstration for now. Beata is hoping to gain certification for its VTOL aircraft by 2027. Joining us now is Beata Technologies CEO Kyle Clark. VTOL is vertical takeoff and landing, right? And I mean, this is so cool. I wanted to come out and see you guys do this. But what does it mean? Are you now going to be able to ferry passengers between, say, Newark and JFK or JFK and Westchester as a business?
So first of all, it was 4 passengers on the airplane.
Okay,
Instead of
4.
coming out and checking it out, why don't you come fly with us?
I would love to.
It's an amazing experience. What does it mean?
Do I get to wear a parachute?
You don't.
While I'm in
you don't.
the
You can if you want, but I don't
Okay.
think you need one. I mean, we had years of safety requirements, testing to bring us to the level to be able to carry passengers. So what does it mean? It's a fundamental change in aerospace. You lower the cost to the point that the recurring cost of flight is nearly insignificant. So I mentioned after the flight, going from East Hampton to JFK was about $7 of electricity. It's transformative. So it's quiet, it's low cost, and it's super safe because the safety standard keeps going up. And this is going to totally change aerospace.
Well, let me ask the obvious question here. We talk about range anxiety all the time when it comes to electric vehicles. When we're talking about electric aircrafts, I have to imagine that anxiety is tenfold at least.
Actually, it's like 1/10.
Okay,
so
tell me.
In aviation, we have compulsory requirements to carry extra energy. that's measured in hours, right? Typically 45 minutes plus an alternate, so an hour of extra fuel. So wherever you're going, you plan for that. You charge up appropriate such that when you land, you have about an hour extra fuel to accommodate any contingencies. Unlike driving on the road, it's a very controlled environment. So the range anxiety is kind of irrelevant in this case.
Unless you're going to Newark, because then you could be just circling for hours.
You could be, but remember, you could land at Teterboro, you could land out in Essex, you could land anywhere if you start to get to low fuel, just like you would in a regular airplane.
So let me ask about how advanced the technology is. Like, can you build a ton of these? Can you start flights soon? Is charging something that takes forever?
So we built a charging network all over the United States. We've covered the entire East Coast, gone to the West Coast. Charging takes about as long as it takes to take the people or the packages off and put them back on. Anywhere between 10 and 40 minutes, depending on the length of the flight. So you can go all over the East Coast. We've flown across the country and back. We have all kinds of flying going on. It's not a limitation at all. In fact, it's a hell of an opportunity for our business because we own the charging network. So not only are we the aerospace company, we're the fuel provider as well.
Yeah, fair point there. Now, Matt mentioned in the intro that you're hoping to get FAA certification by 2027. There is some skepticism out there that it'll happen that quickly. So what gives you the confidence that this could be something that happens in the next year or two?
Yeah, I mean, quietly up in Vermont, we have led the charge beyond all of our public peers on certification and entry into service. So we achieved a market survey ticket that allowed us to carry the passengers last week. That's a step towards certification. We have articles like the hardest articles, the motors, the inverters, the new stuff that are in type inspection authorization, which is one step away from certification right now, which is way ahead of the balance of the industry. So we're not a big marketing company, we're a technology company. I'm an engineer, I'm a pilot, and we've quietly chunked away and done the right things for a safe, reliable, repeatably produced aircraft. And to the facility, we built a huge aerospace manufacturing facility specific for electric aviation in Vermont. And it's actually almost 200,000 square feet, and it'll make 300 aircraft a year.
Wow.
You raised, I mean, what I consider to be a ton of money at the end of last year, right? Over $300 million in Series C. How quickly do you burn through that? When's the next time you're going to need financing?
Yeah, what's fortunate, so we've raised about $1.2 billion total, and we also have an Import-Export Bank of America loan for our facility. So just under $1.5 billion of capital has come into the company. However, uniquely in this space, we're making money selling chargers, selling propulsion, selling batteries. So our cash burn is pretty low right now. We likely will do another financing round towards the end of the year this year. But right now, we don't need any capital. We're very well financed, and we're paying for a lot of the things we do through the sales of our technology.
Well, with that in mind, let's talk about the future of the business. Could you imagine going public at any point? Would you be open to being sold to maybe a Boeing or an Airbus or one of the other big aircraft makers out there? What does the future look like?
Please tell us now on national television.
Yeah.
So I will certainly, so yes, I can imagine. The course will at some point probably intersect with a public company. No, the answer is I have no interest in selling the company. This is something I've been dreaming about. This is my senior thesis in college, finally materializing 20 plus years later, doing something transformative for aerospace and changing the way the world will move. I have no interest in getting out of it. This is awesome. I mean, I get to fly the planes, I get to build the planes, I get to share it with people that I care about. All of our employees fly. This is like a dream come true. I have no interest in getting out.
Dude, I don't disagree, and I'm honestly going to try and take a weekend to drive up and see your facility in Vermont.
I'll have one better. I'll come down and pick you up. And then it won't be a problem.
That would be fantastic. I live right by the Westchester Airport.
We'll fly the electric plane to the electric plane facility.
When are electric planes going to replace, fossil fuel powered jets?
So it will be regional mobility. We'll be less than 200 miles. Then we'll go to 400 miles by the 2030s. Then we'll be up and down the East Coast by mid-2030s. By 2040, 2045, we'll be going across the country in electric planes. The energy storage keeps going up. Electric aviation is really fit to go to high altitude because you don't have to breathe, right? So the aircraft can go pretty fast, pretty high. So the cost of operation plummeting, the economies driving the scalability, and energy storage going up puts us across the country in 15, 20 years.
And you're more easily suited to autonomous flight as well, or even, control from the ground.
It's a modern aircraft that's all fly-by-wire, which means it's all computer controlled. So autonomy is a natural fit for an electric airplane. We've flown our aircraft numerous times autonomously. The military is already buying our autonomous aircraft.
All right, Kyle, I feel like we're just getting started, but we have to leave it there. Hope to have you back again soon. That is Beata Technologies CEO Kyle Clark. Now, coming up, President Donald Trump upping the response to protests in LA and heightening tensions with California officials. We'll bring you the latest next. This is Open Interest.
President Trump has mobilized 700 active duty Marines to American soil, to Los Angeles, joining the National Guard troops that are already there. This is an escalation in the administration's response to anti-deportation protests that increased tensions with California Governor Gavin Newsom. In fact, the president even suggested that Tom Homan arrest Gavin Newsom. Joining us now is Bloomberg's LA Bureau Chief John Gittleson. So, John, how are the protests or riots, I guess, depending on which side you stand on, progressing right now? What's the level of violence?
Well, overnight, there was a lot of police activity, kettling people downtown. We haven't got an exact number of arrests, but there were numerous arrests downtown. There was also some looting and vandalism. It's hard to call this necessarily protest. I mean, there seems to be a sequence during the day where there are demonstrations, protests against government moves. As the evening, falls, then it turns into more sort of confrontations with more anti-police, anti-government activists, sort of anarchist types. And then even later, you have groups of small looters who are just opportunists taking advantage of the, cover of police activity to hit shoe stores, phone stores, other places where they can get merchandise.
Right. Yeah, John, it's a good point. When I think of protests, I think of, a person or a group of people leading the protests and making specific demands. It doesn't seem like that necessarily is the setup here.
Well, it starts like that during the day and then sort of devolves as the day goes along. And anyway, yeah, there's a lot of different groups with a lot of different motives here, from people who have legitimate and very strong concerns about the government actions to people who are just taking advantage of the situation and, getting free shoes or reselling shoes.
I thought it was interesting, John. The White House says that President Trump will not stand for an insurrection from a violent mob that threatens the safety of law enforcement agencies. Does that strike anybody as ironic?
I mean, there are people who say, wait a minute, what about January 6th? And the mobs that stormed the Capitol who he pardoned. But there are also people who say all of his actions are a provocation, which are bringing out the sort of anti-government groups and the more violent, I don't know if you would call them demonstrators, protesters, but civil unrest. And so, yes, right. It does strike people. I don't know if the term is ironic, but it's definitely striking a chord and a different nerve in different people, put it that way.
All right, John, great reporting. That is Bloomberg's John Gittleson joining us from Los Angeles. And coming up tomorrow on Open Interest, we have a big interview with a heavy hitter.
Oh, yeah. Paul Tudor Jones joins us tomorrow. Definitely an interview you do not want to miss.